I know what happened now. Okay. Sorry about that. I got the microphone working now. So the market's open for the week, and we were just looking at, we took a peek at an idea for, pound versus dollar, and now we're taking a peek at a euro versus the dollar. This is on the 15-minute time frame here. That means like each candle represents 15 minutes of action, you know, each little candle. That's 15 minutes of action, 15 minutes, 15 minutes, 15 minutes. So when you're looking up here and you see whatever time frame we're on, it kind of gives you a representation of what we're looking at. And the price of something is the price of something. It truly doesn't matter the time frame. The time frame does not change the price of anything. The time frame is just different ways of looking at the market. I prefer the 5 to 15 and even the 1 minute because it gives you a more magnified vision on what's going on at that moment. However, if you do not zoom out by looking at higher time frames, you're going to miss out on potential bigger moves. So that's another thing about the market is having a general idea of where you're at as a whole. So right here, I've drawn a demand zone. Price is kind of stabilized here, and you've got some green candles moving up. If we zoom in, we can get a bigger idea of why I'm considering that a demand zone. We were going down, and then right here, you had a nice, that's what you would consider a bullish hammer candle right there. Okay. And then you had a little sell-off candle. And then this next 15-minute candle, you see how there's a wick up top and a wick underneath? That's like a doji. So you had a buy, you had a sell, buy candle, a sell candle, a doji candle, which is an indecision candle, is kind of what that means. There's just about equal selling and buying within that candle. And then immediately after that, boom, you get 1, 2, 3 candles moving up. Okay, so what that tells me is that after it made its decision, the decision it had was to move up. And same like up here, you see the last time we had some consolidation in this area right here, this is a little bit of consolidation. It's just sideways price action. So the last time we had some consolidation was up here, and it had made the move down. And now it seems it has decided to change, and either A, it's going to make some consolidation around this area, which it's doing so far, or B, it's going to decide to make a move back up to test this supply zone, because we sold off from here, and they're starting to buy up from here. You see, we're getting to have more green candles here than we are red. So you're starting to get a little bullish right here. So these are kind of the ideas that you have in mind when you're coming into trade and looking for a particular setup. The main thing is you just have to watch what price is doing at that moment, because the goal of the market is to just trick you to do something. But if you're patient and you just watch the market, it will more often than not reveal what its intentions are if you know what you're looking for. So a potential setup could be to take it, if it breaks out from this consolidation area here tonight into tomorrow morning, you could at least take it up to test that supply zone here where it had sold off from. It very well could come up here, sell off again, because a lot of people are still holding positions. Not a lot. That wasn't a big consolidation, but some people are still holding their positions from this consolidation area. So they were going long. They probably thought this was some sort of little flag or what have you, and They might have misidentified it and they might have been buying, trying to go long here, and it just came right on down. And now they're in the negative. But a lot of people might still be holding up here. So there could be a little bit of imbalance up here. And it had a little bit of interest, and usually if there's a little interest in an area, the market tends to retest that area to see if there's any more interest there. So as of now on Euro USD, this way of looking at the chart is kind of telling me that it might come on up and see what happens if it comes up to this area again. See if they can get any more interest, or if there's no more interest, then it could just do one of them. Or we could have a little more consolidation up here, like that, and then it'll make up its mind one way or the other. It all depends on where there's more money at. So if there's more money to be had down here by taking people's money by making the price lower, if there's more people going long on euro dollar, then it'll rip it down. But if there's more people that are shorting this small supply zone, then if it gets enough interest and people wanting to go short from here, because it'll come up here and people might be like, oh man, it came right back up here. You know what? I think it's going to go down again. And if it gets enough money of people putting their money saying, nah, it's going to go back down. It's going to go back down. The market's going to go where the money is. So if enough people say it's going to go back down after getting up here, it'll just break out and rip up and take that money. We'll get rid of some of that squiggly lines there. And I mean, don't be surprised for it to continue up to this next supply area. Now, why do I consider these supply zones? Because these are key areas where there was some consolidation and then a sell-off. Okay? Just like down here. There was a slight consolidation here and then a move up. So really this demand zone should be really like here because it's so tiny, you know. But and up here, if you look even higher on the price, up here where it's 1 euro gets you $1.087. Look at all this consolidation over here. There's quite a bit of consolidation here. Okay. Price didn't really do nothing. It just kind of bounced around in that small area. So, and then it immediately sold off from there. So, it just gives you some points of reference to say, okay, if price does go up, the area that it would most likely hang out and check out would be that consolidation area. I consider it like if you're, you know, if you're walking down the street and, you see a lot of people hanging out in front of this store, well, that's a popular store. Something's going on there. So you're going to walk and you're going to hang out and you're going to say, hey, what's going on here? Oh, I don't like it. Or, oh, let me buy something, you know. And then you move on to the next store. I don't know. That might be a bad analogy, but that's just kind of how I think. So right now, looking at Euro USD, my potential setup could be maybe open up one or two positions, take it up from this area, maybe take one profit at the first supply area, and then maybe take your second profit at the second supply area. Or we could just very well be hanging out down here just to do one of these. More consolidation, and drop for another leg down. So you never truly know where price is going to go because you cannot see as a retail trader where the money is. You just can't. They will never let you look at those numbers because that's how they make their money, by being able to see the books. All we can do is go off of what price is telling us and how the candles are behaving. If that makes sense. Let me click off screen here. So that was kind of our ideas. We'll save our squigglies for now. And we'll go back to our GBP chart, which was essentially the same idea that I had drawn at the beginning, and nothing surprises me. Price can do anything, but starting out as a trader slash investor, you just want to take your time and take it easy and just kind of slowly play the market and just watch how it behaves, because experience is everything in the market. And we'll get cute here. We'll draw a little happy face. We'll put it right there, and we'll give our little happy face dance. And that's all I got.